everybody, my name is Jade Luna. I go to Nicholls State University and I'm an accounting major. Today we're going to be talking about the multi-step income statement, which deals with your revenues and expenses, and at the end you get your net income from subtracting expenses from your revenues. So the first step is revenues. So you take your sales revenue, you subtract it, your sales discounts, and you also subtract your sales returns and allowances, and this gives you your net sales. Now we get to the expenses, and your first expense is your cost of goods sold. How you calculate cost of goods sold is you take your beginning inventory, you add your purchases, and you add your freight in, and this gives you your cost of purchases. Then you subtract your purchase returns and allowances, and you also subtract your discounts, and this gives you your goods available for sale of $600,000. Then you take your ending inventory and you subtract it to get your total cost of goods sold. Now to get your gross profit, you take your net sales minus cost of goods sold, and that gives you gross profit. Next section in your expense is your operating expenses. And this is your selling expense and your administration expense. So your selling expenses is your main sales and your operations. So some things like sales, salaries, and commissions, advertising expense, delivery expense, depreciation on sales equipment. You add all those up and you get a total. And then some administrative expenses are officer salaries, utilities expense, depreciation on buildings, and other office expenses. You add those, and then you add your total expenses. You subtract your gross profit from your expenses, and you're going to get your income from operations. Now, there's also some revenues and expenses that don't fall within your main operations. So we call these other revenues and gains, and other expenses and losses. So some other revenues and gains would be dividend revenue, rental revenue. You add those, you get a total. Other expenses and losses could be a loss on store damage or an interest expense on a note. So you're going to add your revenues and gains to your incomes from operations, and you're going to subtract your expenses and losses, and you're going to get income before income tax. So we take our income before income tax and then we subtract our income tax. Now this would usually give us a net income, but in this situation it's income from continuing operations. So this tells us we have some discontinued operations that we have to account for. So that's what we're going to see on this next page, is some examples of discontinued operations. So we have a loss from operation on discontinued subsidiary, and then we have a gain on disposal of a subsidiary, net of taxes. So what we're going to do is we're going to calculate this, and we're going to get $50,000. So now we have to take our income from continuing operations minus our discontinued operations, and now we're going to have a net income of $250,000. Now the last part of our multi-step income statement is our earnings per share. Now again, if it was just net income we had, it would only be one calculation in our earnings per share, and that would have been your net income. But since we have discontinued operations, we have to account for our income from continuing operations, our loss, our gain, and our net income. So 4 different calculations when you're dealing with discontinued operations. So like I said, our first calculation is going to be our income from operations, and how you calculate our earnings per share is you take your total. It's always going to tell you your preferred and your common stock outstanding. So total minus preferred stock divided by common stock, and that's going to give you this 290 right here. And then you're going to do your loss the same way. Take your loss minus preferred stock divided by common stock. Gain minus preferred stock divided by common stock, which is what you see right here. And then you take your income from operations minus your gains and your loss, and it's going to give you net income. But you could also calculate net income by doing 250 minus preferred stock divided by common stock. So that is a brief explanation of a multi-step income statement.